Welcome to Bears in Exile. Today is Monday, March 25th, and this is a quick hit on the indexes. Starting off with the Dow. Alright, so it was a wild and crazy day with big swings up and down and all around. And what's going on? Well, in the daily running thread, I put that the Bears have a shot, and they are running out of time. And I'm going to show you exactly what I mean by that. Here we are with today's movement. And yeah, it was a down day, down 64 points. And what is it? It's a big spinning top. Indecision candle. But it did make a new recent high, bullish. It made a downtick, which was resolved intraday. So I have to see what it wants to do next. But once again, if there was a bubble here, it is fixed. Kind of crazy. Beyond that, what do we have? I mean, that doesn't tell us too much, right? I mean, I'm looking for a blow-off top to mark the end of this run-up, and we simply have not had it yet. On one hand, you could look at this and say, oh, we're declining on the CCI, the stochastics, the RSI, the MACD, and the MACD histogram. This is negative. We should be going down. And obviously we have a clinch of the Bollinger Bands. Something is about to happen. But I'm going to scale this just right. 14-day RSI moving average is going up. You can consider all this movement down as a secondary reset at this time. And unless the Bears are able to make a break of the previous lows, which they weren't even able to tap today, it's just a matter of time before this shoots off once again and this secondary reset is finished. You have to have a break of this bottom to get the 14-day RSI moving average to turn. And at the angle that it is right now, I think that that's semi-unlikely. So, spinning top, indecision, you could say, well, what's in store for us closer? I mean, today we had the really wonderful move up, which we were looking for, and unfortunately it wasn't able to maintain. Had it been able to maintain and keep on going, I think today might have been the beginning of the end of this move up, but instead it decided to fall down and make all of us wait a lot longer. So what do we have here? Well, you can see the 14-day RSI moving average is coiled low, just waiting to move up. These stochastics are low, they're just starting to turn up. Same with the CCI, the RSI is starting to turn up, the MACD histogram is starting to turn up. Notice the ascending lows in the MACD histogram. The MACD itself is low and just needs to turn. So we have really nice confluence in the 60-minute time frame to bust out of this sideways movement. Hence, the Bears are running out of time. And once we do have the correct break out, you're going to have a lot of people needing to cover. I mean, everybody's bearish thanks to the European nonsense. So all you need is a break, a blow-off, and then finally everyone will be bullish, and then it can fall apart. Going on to SPX. We have more of the same. There's not going to be too much to rehash here. There are a couple slight differences. We have a spinning top, just like the Dow. We had a downtick today. It was resolved intraday, just like the Dow. Is there anything else? Well, we have more room on the 14-day RSI moving average, although its angle up is not quite as good. You can still count all of this as secondary reset and coiling for a turn and move up. That's what it looks like, unless we're able to take out the previous low just shy of 1540 on SPX. Do I believe that that's going to happen? I'm very skeptical of it, so I would say no at this moment. But you never know. Stranger things have happened. And going on to the VIX. We've been talking about this since back over here once we tried getting back up, and I was saying that In order to change the tune of the VIX, you would have to take out this high, and that it was a good distance above. What do we have today? A fat body spinning top, and while it did exceed the highs from the last couple of days, and it did penetrate the long-term moving average bar, it still closed inside the major price consensus level, pierced above that. It closed inside the long-term moving average bar. It is still an indecision candle, and it would appear that we still have descending highs. So is this a good thing? No, it is not. Does that favor the bulls? Yes, it does. Beyond that, indicator-wise, 14-day RSI moving average moving down. We've been noting that this entire time. And now we have the stochastics also turning to join it. The CCI is poised to join it. The RSI is still going up, the MACD is still going up, the MACD histogram is still going up, but those could turn very easily, which would mean a retest of the previous low on its movement down, which it's poised to do. So, do I think that this looks really good for the bears? No, I don't. I see it as failing, weakening strength. That's what it looks like to me. And while the major indexes are going sideways, this one is obviously slanting lower. But it wouldn't be right unless we looked at the 60-minute and see if there's any difference, see if that jives with what we're looking for. Obviously, we can see the descending highs. And today, it had a really nice run-up. I was really happy when it opened and it was way down here. And of course, it decided to go way back up and forcing me to delay my plans. But does it look strong up here? No, it doesn't. What else do we have up here? Well, we have the 14-day RSI moving average, pretty darn high. I think it only has a day or two to survive at the levels that it's at. Maybe it can last through the week, but I kind of doubt it. We have the stochastics high turning, CCI high turning, RSI not high and pointing down. It has some negative divergence. MACD histogram going down, MACD down. This does not look good in the 60-minute time frame. This looks like it needs to go down, and that would be good for the bulls. Absolutely. And finishing off with TNA. And TNA not that different from everything else, so it'll be quick. It's a huge spinning top, and it tested the previous high, did not exceed it, I do not believe. No, it did not. And but this one did not have a downtick. If it had a downtick, it would have been resolved intraday, but it was not one. And same thing with this one, 14-day going up, everything else is secondary reset. And bears are running out of time. They need to collapse this fast if they are really going to change the short-term to intermediate-term outlook, which they could do, but simply just doesn't look like it's going to be. It also wouldn't be right if I didn't look at volume, internal structure of volume, see if anything has changed material. Blah, I can't talk. Materially. I think that still came out right. But anyways. We have 4 greens, 1 red, no change in the accumulation distribution channel, and we have the on-balance volume pointing back up after closing in on its target area, so that is removing itself from danger as well. Yet another reason to believe that the odds are that we will be going up a little bit more before we run out of space, and that's fine with me. That is absolutely fine. And that's it. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you.